Good morning, I'm Maiki Oreta, and you're watching Basis Points, where we dive deep into the numbers and the stories that drive our economy and shape our world. The headlines. A record-breaking achievement for the BIR. The tax agency blows past its 2024 collection target of 2.8 trillion pesos. A power shift in Congress. Marikina Representative Stella Quimbo takes the helm as acting chair of the House Appropriations Committee. Stunning revelations from the U.S. Special Counsel Jack Smith reports that President-elect Donald Trump made an unprecedented criminal bid to hold on to power after losing the 2020 election. And stay tuned for a deep dive into the markets. We'll talk to Angel Paces, the CEO of AIA Investment Management and Trust Corporation Philippines, on how global economic trends and more are reshaping the global landscape. Now let's take a quick look at how the markets performed overnight. On Wall Street, investors weighed inflation data and awaited quarterly earnings to justify stock valuations and to gauge the strength of the U.S. economy. The Dow Jones Industrial Average higher by 0.5%, the S&P 500 just up by 0.1%, and the Nasdaq went the other way, lower by 0.2%.
This morning, Trump posted on Truth Social that he's going to create an external revenue service. That's going to be focused on collecting tariffs and really clamping down on companies that are selling into the U.S. From abroad. This really could be a problem for many investors, as tariffs will obviously push up the price of goods. There also could be retaliation from other countries. And so this is one of the reasons you've seen a lot of volatility in the markets. And particularly today, Trump seems to be tripling down on his desire to really pivot to tariffs. And so that really could be a concern for investors going forward.
Over in Europe, markets ended mixed. The FTSE 100 lower by 0.3%. The DAX in Germany higher by 0.7%, and France's CAC 40 up by 0.2%. Now, the Bureau of Internal Revenue, or the BIR, achieves a major milestone as it exceeds its 2024 collection target of 2.8 trillion pesos. Preliminary figures show this is the first time in 2 decades that the Philippine Tax Agency has hit its collection goal. This comes despite slower economic growth of 5.2% in the third quarter, down from 6.4% in the second quarter of 2024. The milestone is credited to the reforms initiated by Commissioner Romeo Lumangi Jr., including a nationwide ISO certification for crucial processes to tackle tax evasion. This shows the Philippine government's efforts to modernize tax collection are paying off, providing much-needed funds for infrastructure, healthcare, and other public services. Now, the country's debt continues to rise in November. Sujin Kim has the details.
The Philippines' national debt hit a record high of 16.09 trillion pesos as of November 2024. According to the Bureau of Treasury, this marks a 70.7 billion peso or 0.4% increase from October, driven by new borrowings and the peso's depreciation against the dollar. Currently, nearly 70% of government debt is domestic, while over 30% is foreign obligations. Domestic debt rose by 31.82 billion pesos due to additional securities, while foreign debt grew by 38.88 billion pesos, largely due to the peso's weakening. The Bureau of Treasury is working to shift the funding mix to 80% domestic and 20% foreign to reduce exposure to foreign exchange fluctuations and global uncertainties. National Treasurer Sharon Almanza clarified that the Philippines remains far from breaching the 70% debt sustainability threshold, currently at less than half that figure. Economists also note that the rise in outstanding debt aligns with fiscal targets.
Hindi siya cause of concern kasi may plano or planado or may programa ang ating deficit and debt figures. So alam natin over the medium term magkano yung kailangan nating gastusin para sa ekonomiya at ilang porsyento ng gagastusin natin yung uutangin ilang porsyento yung manggagaling sa taxes, etc. So, it's not a cause of concern in a negative way. We are always concerned about the figures, but ang maganda dito, better than expected yung figures. If you will look at the DTR press release, sinasabi nila na yung debt na figures lower than the program. So in the end, kung ano yung pinlano natin na priorities na gastusin, na amount na dapat gastusin at yung uutangin ay on track tayo.
The government aims to achieve a 60.6% debt to GDP ratio by 2028. While pre-pandemic levels were below 40%, the Philippines had to borrow heavily to fund essential services like vaccines.
Ang debt figures natin ay tinatawag na stock of debt, meaning nag-accumulate yan over time. Tapos, pagka hindi mo babawasan yung principal, interest lang ang babayaran mo, talagang lalaki at lalaki. Pero ang maganda dito is, pati principal, tinatry nating bawasan over time para talagang over time yung debt over GDP ay magpipik sometime in the next few years, tapos bababa na siya.
However, think tank Ibon Foundation warns that the rising debt could become a heavy burden on future generations.
That debacle in December was quite clear about government's priorities. They are willing to automatically pay all debt without any consideration at all of how their contribution or not. But unfortunately, they're also quite willing to cut spending on education, on health, even on housing actually, and agriculture, because they are keeping debt service sacrosanct. And I think that is a huge burden on Filipinos of this generation, but especially when talking about education and health on future generations of Filipinos.
Africa also called for debt relief from creditors.
There's so much to fix on the revenue side to reduce our reliance on debt, but it's actually also so much to fix on our debt service side. I don't think there's any shame in asking for debt relief. We should go to our creditors, especially the multilateral development lenders, but even friendly bilateral donors, bilateral lenders. Would you say Philippine poverty and hunger are getting worse? Agriculture and domestic manufacturing are failing. They're decades lows. These, I think, are good cases for asking for lighter terms for creditors to ensure repayment and debt sustainability, that is not at the expense of social services and people's immediate needs right now.
Sujin Kim, Bilyonaryo News Channel.
Marikina Representative Stella Quimbo is named acting chair of the House Appropriations Committee. This follows the resignation of Ako Bicol List Representative Zal Lico, who stepped down due to pressing health concerns. Quimbo, who served as the senior vice chairperson of the Appropriations Committee, assumed the role under House rules, which allow the next in line to take over once a post is vacated. She will serve in an acting capacity until a new chairperson is formally appointed. This transition ensures continuity in handling the national budget at a time when the country is managing crucial fiscal challenges. In an interview with the Bilyonaryo news channels At the Forefront, Quimbo says that she will be overseeing the implementation of controversial AKAP funds.
Most importantly, we still have oversight on the budget. So we need to make sure that although the budget has been approved, we need to make sure that the executive executes the budget well, so that the funds are utilized in a timely manner.
Swiss Bank UBS AG is not exiting the Philippines. Now, this as there were reports that it had ceased operations in the country. In a statement to the Bilyonaryo news channel, UBS stressed that it remains committed to the Philippine market. UBS, one of the world's largest wealth managers, explains that its securities and investment divisions will continue to be active players in the Philippine financial landscape. The closure of its representative office in Manila, which operated under a separate license and had been dormant for nearly 2 decades, was a strategic decision. UBS country head Rob Bigo emphasized that this move is purely administrative and does not impact the bank's operations or its long-term commitment to the country. Now, the closure of the representative office is a minor adjustment with no significant implications. UBS remains as a key international player in the Philippine financial markets, underscoring the country's strategic value in the bank's global operations. Now we're taking a quick break. Basis Points will be right back.
The latest news, national issues,
with regard to was very vocal about charter change.
the political scene, the trust and approval ratings of President Bongbong Marcos and Vice President Sara Duterte decline, and conversations with prominent personalities.
Brings back wonderful memories of past Christmases when I was a little boy in Iloilo.
Be timely informed, be insightful of the news. All these firsthand at the forefront.
Trading at the Philippine Stock Exchange opened just a few minutes ago. Let's take a look at the initial figures. Now, as of 9:47 this morning, the PSE index is higher by 0.9% to 63.55. The broader all shares index up as well, higher by 0.6% to 37.09. Now, if we take a look at the sub-indices, the financials and mining and oil counters are bucking the market's uptrend. They are marginally lower, whereas the industrial holding firms, services, and property counters are higher, with a property counter seeing a lot of buying action so early in the morning, and it's up by nearly 3%, up by 2.8%. Now, no foreign exchange figures. Let's go take a look at that. Okay, all right, the peso opened at 58.65 against its previous close of 58.62. Now, from the movements in the equity and foreign exchange markets, we turn you over now to see the bigger picture, to see how global economic trends are shaping local markets and investments. Now, leading the discussion on this is the CEO of one of the leaders in the Philippine investment landscape. We have Angel Paces. She is the CEO of AIA Investment Management. Angel, we've got some tech issues, but thank you for being here with us. Lots of things going on. The biggest thing so far was the U.S. Federal Reserve recently signaling leaner interest rate cuts moving forward. Now, as a knee-jerk reaction, the PSE index tanked earlier this week, lower by 2.4% in a single session. What are the implications that these leaner cuts are going to have on our local market? I mean, off the bat, the BSP is going to have to recalibrate its own decisions on monetary policy, and this is going to affect the currency, see some depreciation there, and second-round effects on inflation. What are your thoughts on this? We want to know the bigger picture from you.
Okay, so the market is always moving on expectations, right? So from last year, after hopes of, let's say, as much as 4 rate cuts, it's going to be a lot less. So that this disappointment is actually going to impact the market. And of course, the trajectory of growth that we were expecting will have to slow down a bit. If not, while it will still be good on the back of the recovery of the consumer from the, we had several wage hikes, allowing our consumer to catch up with inflation. I mean, the disappointment is still going to impact, it's still going to impact in the near term.
Mm-hmm. You say we're going to have to slow down a bit. What exactly do you mean by that, Angel?
Oh, well, last year when everybody was talking about 4 rate cuts, the projection is between 6 to 8%, right? Above 6%. A lot of the research houses are now calling for something less, a little below 6%.
Okay, now what impact do you think that's going to have on the peso? We're hovering at 60 to the greenback. What's your outlook for the local currency, given the expectations of leaner rate cuts by the Federal Reserve, and given how the BSP is going to have to recalibrate their own moves to account for this?
Okay, so of course, if the interest rates in the U.S. remain high, right, that increases the attractiveness of the U.S. But of course, everybody's talking about U.S. exceptionalism. What does that mean? The economy is going to be hold up better than the rest of the world, and that's actually going to attract money, and that means a possible depreciation of your peso. So a lot of things are moving, but the technicals are saying that you maybe over the next 6 months you'll probably test 59 again, and if we do break 59, that could go on a protracted uptrend to about 64. What do you need to watch out for? Look at where the 10-year U.S. Treasury is going.
Ouch for sovereign debt. Latest data from the Bureau of Treasury revealed that the government's total outstanding debt as of November 2024 was up 0.4% month on month. That doesn't seem like a big of an increase, but when you're talking about this kind of money, that translates to 7.7 billion pesos. Now, that's a month-on-month increase by 7.7 billion pesos, which brings our sovereign debt to a new high of 16.1 trillion pesos. Now, this was also largely on the back of weakness in the peso, which bloated our foreign-denominated currency liabilities. Are you worried about the government's ability to pay for this? And a lot of this debt was because of infrastructure spending, and a lot of it was because of the COVID pandemic. So it wasn't just us. The whole world had to respond by increasing their own debt levels. Where does the Philippines stand, relatively speaking?
Okay. Debt to GDP is actually one of the lowest for the Philippines. As you remember, we were being criticized during the pandemic because we were one of the few who didn't go all out and spend, and we actually protected our fiscal position. Honestly, I'm not really worried. Earlier, you announced that there's an improvement in the revenue collection, and for all intents and purposes, the government has signaled that they will prioritize fiscal sustainability. So they actually have a good handle on the increasing debt and the ability to service it. So it's all moving according to program.
Okay, speaking of according to program, taking a look at the numbers, where does the Philippines stand, and how does it affect your outlook for 2025? What are your expectations for inflation, for GDP, for monetary policy, for the balance of 2025? I mean, we've just gotten into it, but what are your projections?
Okay, so let's bifurcate a bit, right? If you're going to look at the real economy, we believe will be okay in the sense that, as I've said, consumer spending, which is roughly 70% of your economy, will recover because we've had a series of wage hikes, and of course, rice prices have gone down. So for the bigger chunk of the Philippine population, rice is actually 30% of the consumption basket. So with rice prices falling, they have more to spend, right? So it's actually going to be good real economy-wise. Now, financial markets-wise, it will still be good over a 12-month period. But if you, especially on the back of very low valuations, now what we need to watch out for is that, there's a lot of uncertainty in the near term. So what we are seeing is really you're going to see a lot of volatility in between. And I hope investors will look at that volatility as an opportunity of a lifetime.
Opportunities of a lifetime. Okay, what are the opportunities, not the one within our lifetime, but within 2025? Right now, the PSE index is up by 1.2% to 63.73. Back in October, we wouldn't have thought that we would have fallen to this level. What is your outlook for the PSE index now?
Okay, the outlook easily a technical recovery. Well, initially, the first resistance is about back to 6.5, right? But you're really looking at somewhere between 7.7 to 8.4. That's the target. The timing is really just somewhat a little harder to predict. But that's really where you're going. And remember, that's just mean reversion to about 13 times PE because you're very, very low now, right? So a technical rebound could easily bring you to 7.7. So that's the outlook. We are looking at 8.4 as a target for the PSE, again, mainly on mean reversion. But in between, that's the big story. And as you know, the President-elect Trump has doubled down again on the tariff rhetoric, and the how the other players will react is going to be a big question mark for the rest of the world.
Yeah, how everyone reacts is going to be a big question mark, right, for the rest of the world. In the meantime, how can investors position themselves? What should they be buying up right now while the market's at the 6,300 level? We're on sale technically.
Yes. So in terms of sector opportunities, over a 12-month period, we still like banks because they're still projecting double-digit lending growth on the back of consumer lending. And as we know, we're very bullish on the prospects of the consumer this year. In the very near term, we actually like services because they are a defensive play. And you have company-specific stories, like maybe the listing of GCash, that's actually providing interest in the telco sector.
All right. Well, that's something to look forward to. More listings and more opportunities to grow and earn. So Angel Passes, the CEO of AIA Investment Management, thank you so much for sharing your time with us this morning to put things into perspective.
Thank you for having me, Maiki.
All right, and that's it for Basis Points. I'm Maiki Oreta. Please catch us tomorrow for more news on the financial markets and more. Keep it here on the Bilyonaryo News Channel, always on top.